Good morning, everyone. It is Monday, December 8th, and the market is not quite open. And it looks like the market is heading towards a green open. If everything stays the same in 30 minutes, the Dow is up slightly, S&P is up 0.15, NASDAQ's up 0.28. And not a lot of news other than we have interest rates on the table this week. The Federal Reserve is going to meet on Wednesday, make a decision as to what their lending rate's going to be. Most investors are thinking they're going to reduce interest rates by 25 basis points. That's what's expected. Don't think we're going to get a surprise, but if we do, the market would move. Other stories, we have some earnings coming up, which would be interesting, and we could cover that. On this live stream, we're going to do fundamental analysis and we're going to do technical analysis. In the we part, I'm joined by my colleague, Daryl. Good morning, Daryl.
Good morning, Victor. Good to see you.
Great to see you. I'm going to handle the fundamental part. Just look at a business, look at their revenue. Is it growing? Are they profitable? Do they provide free cash flows? If we forecast those free cash flows and those profits, what's the net present value of that forecast? That's what I do. And then Daryl looks at the charts and he looks at the technical data to see how's that stock been trading. Is it headed up or down? What are the trends that he's seen? And I hope you find the analysis interesting. I think you get the best of both worlds on this stream. If you're a stock investor and you're interested in a stock, this, I think, is interesting research that you could hear. If you would like us to look at a stock, please put it in the chat. Paid members get to put their stocks in the chat. We cover them. If you're not a paid member, no big deal. $5 super chat, and we can take a look at your stock. Looks like we have Fox 215 News. How are you, sir or ma'am? Not sure which is which, but good morning anyway. So looking at the week, again, no big headlines. I don't think we're headed toward anything significant. What's your observation of the market? What do you think is going to happen this week? What's your best guess?
The mutual funds are still doing their thing through probably the end of this week. So we could have a little bit of volatility. And then I think the following 2 weeks we'll have a pretty good market. This week will just be challenging. I think we'll have the volatility and we might end up at the week like we did last week, where we're not far from where we started the week. So we'll see. It'll be interesting to watch this week.
Yeah, last week the S&P went up like 0.58%.
Yep.
And that's kind of it's a good week. It had kind of a rough way to get there, or we had some days where it had volatility, but the week prior, which was Thanksgiving week, stock market went up a lot. So to follow up that positive week with a net positive week, I think is constructive. I think we're headed toward that Santa Claus rally. Right. We've got a request from Best Days. Good morning. Let's look at UL. It dropped today. So I put it on the list. We've got a couple of stocks we wanted to cover, and then we're going to get to UL and give you a review of UL. Thanks for tuning in. Great to see you. Dwayne, good morning. Good to see you last night on the stream. And, this is a stock investing channel, but I must say that the NFL and college football really delivered this weekend. Ohio State, Indiana, man, that was a clash of two really good football teams in college. And the University of Indiana beat the mighty Ohio State Buckeyes. Excellent game, but that's kind of a nice milestone for them. But I'm sure they're looking at that national championship as the ultimate trophy. And that was a really good game. And then the NFL yesterday, the morning games were terrific. Buffalo and the Cincinnati Bengals played in the snow. That was epic. And then the evening game was pretty good. Seeing the Houston Texans go into Kansas City and beat the mighty Chiefs.
No way.
Good football games. Yeah. That's I think that the Houston Texans, they've got a really good defense. They've got a young team. And if they could put it together, I think those guys could be a threat in the playoffs. The AFC is loaded this year. The NFC is also good, but there's some teams that are really standing up tall. So it is go time in the NFL. All right, back to stock investing. Enough of that football stuff. So we covered a few topics there. Some big, the news that's going to come out of these earnings is going to be significant. We got AutoZone, and I'm going to show Polymarket. Not everybody is confident that AutoZone is going to beat their earnings. So that's interesting to see Polymarket, the predictions market, seeing how people that are putting money down are saying, hey, I'm not sure AutoZone's going to beat. That was interesting to see. AeroVironment, which is they make drones, defense-related products. They're going to announce tomorrow. Ferguson, which does plumbing supplies and things like that, they announce tomorrow. Campbell Soup announcing tomorrow. So tomorrow will be, a couple of earnings that are interesting to watch. Nothing major. Any stocks tomorrow that you invest in or that you trade in, Daryl?
No, the only one I have reporting this week is Costco on Thursday after the bell.
Right. Perfect. So moving to Wednesday, we got Adobe, big one. And Adobe, according to Polymarket, like 93% of participants are saying Adobe's going to beat. All right, it was 96, I think. Synopsys, I believe they do software for the semiconductor companies. They're going to announce. Chewy, I think they do pet stuff, right? So that they're going to announce. But the big one is going to be Adobe and Synopsys. Moving to Thursday. Thursday is going to be big. Broadcom. It's a big cap. So we'll see what Broadcom reports. I've been on the sell side for Broadcom. I think the stock's too expensive, and I think their semiconductors are good, but they don't have the proprietary, differentiators that like an Nvidia has. Like Nvidia, there's no close compare. Where Broadcom, those workloads can use Broadcom, they can use Qualcomm, they can use Intel, they can use AMD. Those chips, they're different, but they're not drastically different. And I think that Broadcom has hit a very good growth period, but I think that period can come to an end, and I think stock investors could be surprised to the negative side. But we'll see. We'll see what their earnings reveal, and we'll see where the stock goes. Costco's hasn't had the best year from a performance standpoint. The stock hasn't really moved high, and it's been a good grower, by the way. Their top line growth has been good, and of course their membership program, that's all profit. So we'll see what they announce. And it's always kind of, you get a combo information package out of Costco. First, the stock, but second, it's a little bit of an economic report. Are people buying a lot of stuff at Costco? What's the consumer doing? So that was going to be big. And is Costco before or after the market closes?
After.
Okay. So after, and then Lululemon, the apparel company that, makes the leggings and mainly women's apparel, they're going to be announcing that stock. It's caught some, like, I think Michael Burry is in Lululemon, And I have to admit, I look at it with a little bit of interest because they have good margins for being an apparel company, but I haven't bought any shares. I'm just, fashion and apparel, not my strong suit, and I better pick things other than primarily women's apparel as a business to think I know what I'm doing. So I think I'll just be a spectator on that one. Restoration Hardware, Manchester United, for all you footballers over in the UK. Maybe you are a Manchester United fan, maybe you're not, but they are publicly traded. We'll see what they have to report. And those are the big earnings this week. And when we look at Polymarket, I've been using Polymarket just to kind of, if anything, just one more information source. They're saying AutoZone, 66% of those who participated think it's going to beat, which isn't very high compared to others. Campbell's, 95% of those participating believe they're going to beat their earnings. Looks like GameStop, 89%. Adobe, 96%. So that looks pretty confident there. All right. So looks like Mike is on. Good morning, Mike. Yeah, that snow game was, what was interesting about the Buffalo Bills and Bengals game is even though it was snowing, the weather was pretty nasty. It was a high scoring game. Impressive. I would have thought it'd be one of those classic, 6-3. But no, it was like 38-35 final score or something like that. All right. So let's get into some stocks. I wanted to lead off talking a little healthcare, and I'm going to go over Regeneron. Regeneron is a company that discovers, invents, develops, manufactures, and commercializes medicines for treating various diseases worldwide. This company is a pretty good market cap, $73 billion. Stock hasn't been doing much this year, but for a while, this thing was cranking up. And we've covered this stock, I would say, for at least a year, maybe coming up on a year and a half. So is this big sell-off an opportunity? Is this stock worth a lot more? That's what I'd like to kind of begin to get my head around. I added this stock to a video that I released to members on yesterday morning, and this was one of the stocks that was in there. The forward P is nice and low at 16, and analysts think there is a discount available on Regeneron. Looking at how the company has been performing, the revenue growth has been okay 2024, but when we get into the quarterly, that's where we see the contraction in the business, which probably led to the initial sell-off in the stock once they started to forecast that contraction. And then Q2 grew a little bit. Q3 that they reported, tiny bit of growth. So I think that's where the problem began. Healthcare stocks, and especially biotech, they tend to have really good profits. In this case here, this company does have very good profit margin. The gross margin isn't very good. 45 is okay, but not very good. And but the profit margin at 32 looks pretty damn good. And then the free cash flow margin, very good. So that it's got a lot of meat on the bone there. 23 analysts cover it. And on average, they think there is a discount. Now the forecast, we make money when we pick up a business before it begins to flourish. And right now we're operating in this year, fiscal year 2025. It looks like next year they're going to grow by 5.5%. In 2027, grow by almost 10%, followed by 6.7. These are good growth numbers. This is a good size business, 15 billion revenue, and they're going to make themselves more profitable. They made themselves more profitable this year, but they're going to keep growing those profits, bringing down their PE ratio to a very low amount. I like the forecast of a business that's going to start growing. They can accomplish this. I think this stock is going to go higher. It'll probably, if they're growing, those earnings reports are going to be good news reports like, hey, this is how we grew and so forth. Now, I've been using Gemini to kind of see when patents are going to expire. And let's ask Gemini. Yeah, I think it'll work with that. Let's see what we find out about patents. So it's when you look at a healthcare stock, it's important to know, hey, you got patents on drugs you sell, but when are you going to lose your exclusivity in selling that drug? It looks like so formulation of these. Not getting kind of a clear picture. It shows me a couple of drugs that are going to expire in the 30s, like 32 and 39, and another one in 26 and 27. Okay. So not a lot of useful information, but I asked the question there. Now, when I look at Regeneron, and I updated my valuation on this on Saturday, I see that the stock's nicely discounted. Now, I'm expecting that the company's going to start growing by more than 5%. So I'm growing cash flows. I'm using the trailing 12 months cash flows to set up a forecast for cash flows. And that cash forecast goes into the future 4 years. And then I use a terminal value to basically put a number for all years beyond year 4. I'm discounting all that future cash by 7.5%. And the net present value of all those cash flows is $122 billion. They have some good cash on the balance sheet with debt only at 2.7. So we're way above its current market cap. So on cash, and I showed you that Regeneron produces a really good cash yield. So that's interesting. Now, again, looking at their revenue forecast, they're supposed to start growing 5-6% in 2026, followed by even greater growth in the year that follows. Those earnings reports I'm expecting are going to have good news in them. And this cash flow looks really good. Now, when I look at earnings per share, the profitability, and I use a PE of 18. Nothing crazy. They are going to be growing, so I think they deserve an 18. They have good profits. I get a discount of 20%. I blend the two. I like blending the two, but using this one as 66% of the blend, this one 33, you get a 36% discount. I like that discount. So I'm, thinking about Regeneron. I'm thinking, is this a good investment? The numbers look good, but that's part of the process. Let me turn it over to Daryl to see what he thinks about the technical setup for Regeneron.
Okay, so I'm drawing some longer term support and resistance lines, and I was just going to add a few arrows here. So then let me just move those around just a little bit. Okay, and then I'll explain what I'm doing here. So I'm just looking back over a 3-year period and trying to find some common points in the price action where there tends to be some resistance. And I found this upper line at about $832 that it reached that price in April of 2023 and was pushed back. And then for actually 2 or 3 months, it just floated right around that price range and then finally pulled back. It reached back up to it, was pushed back, and finally broke above in December of 2023. And it traded above that all the way until November of 2024. And we have not hit that level since. So then I just looked at another, this would be more of a support line. So it reached that level and bounced off that level back in January of 2023. And then again in June and July of 2023, it bounced off of it in January of this year, kind of traveled along that line and then finally broke down through it and has spent basically since March underneath that support line. So we did reach a low. Okay, now I'm going to go to just 1 year. Now that you know why I have those lines where I do. We did hit a low in June of about 475 or so. And that's this green line here. That would be a good support line. There's probably at least one other one that could be around the 545. That would be a good one to watch. So they did have a pretty good run. They started on about let's just go back to here, about the 27th of October. So I presume this was probably earnings. I don't know that for sure.
Yeah, that's correct.
Okay, so that was an 11%. They pulled back just a bit and then it went on a run all the way through November, reaching the most recent high of 801. So that's going to act as resistance. Now the 5-day has rolled over. The 21-day is still rising, but it looks like on Friday it almost tested that level. It would be wonderful to see this week that it could maintain that as support. If it breaks down through that, then we do have this longer term support line around 677. Then I have a shorter term support line drawn around 657, and the 50-day moving average is just shy of that. So if it doesn't hold this 21-day, it would really need to hold on to this 50-day to show any signs of real strength. The 200-day, let's go back out a little bit. The 200-day peaked out somewhere around the 31st of October of last year. It has been in a downturn, but notice that it is leveling off, and it could even be back to a rising state based on the shape of that.
I have a question on this
Go
graph.
ahead. Go
So
ahead.
they talk about death cross and golden cross.
Yep.
Did we achieve a death cross on this one?
Yes, right here on the 8th of November of 2024.
And this is
So
why we have to be careful with a death cross, right? Is a death cross usually means the stock is heading lower, like in this case it did.
yes,
And when
uh,
would a golden cross be achieved? What's the definition of that?
right here. So that
So
would have
we
been on the 11th of November.
and that means the opposite, that this stock could be going higher.
The 50-day crossed above the 200 days, and these it's kind of interesting to start watching these, because when the 200 finally kind of bottoms out, and where's the 50-day? It kind of traveled right along that 50-day. So when it stopped um, declining and starts increasing, that's a nice time to really start getting interested, even before the golden cross occurs. Start watching the shape of these curves and when they roll around, because these tend to lag a little bit. So if you want to be early on a change, keep an eye on the curvature of the 50 and the 200. So the 200 more closely aligns with the golden cross, but the 50-day would be a better sign here. Once it started rolling over and then it's holding that 50-day on the way back up, that's usually a pretty good entry point after a
Mhm.
big decline.
And at this point, Regeneron's showing that we're on an upward trend.
Yep. They did get into an overbought condition starting on about the 10th of November. It can stay in an overbought condition for quite some time. Here it looks like it was about 2.5 weeks, and it dropped out of the overbought under 70. It's has not got back down to the 50 line. It'd be great if it can hold at least the 50 line. Less enthusiastic if it can hold the 40, but that would be a good sign. We don't want to see it reverse and go into an oversold, because the momentum is really turned around at that point. But if it can hold a 50, between a 40 and a 50 here, and start a small recovery, then that would probably be a powerful signal. And then one other thing I see here is we do have a bearish crossover, but we are in bullish territory. So keep an eye on the PPO as well. See if it gets back into negative territory or whether it bottoms out and starts curving back around.
Perfect. Thank you, Daryl. Great work. So the next stock that I wanted to cover was Visa. And Visa for the 1 year, not a spectacular success, up 6.89%. Year to date, not spectacular. The S&P is up like 16%. So Visa is not keeping up with the S&P. Now, over the 5 year, for periods of time, this was like a really good stock. And now we're seeing that over the 1 year, hey, what's going on here? Are the fundamentals breaking down for Visa, or is this creating an opportunity? That's why I started paying attention to this one. And this is a big cap stock. Visa, I don't think many of you are unaware of what they do. They have the big network where credit cards use their network and they pay Visa a toll. Its market cap $634 billion. Investors are paying 15 times revenue for the company. They have a forward P of 25.87, which seems okay because I happen to know them. And I know their profitability and growth, which I'm going to get into in a second. Now, what they do over the last earnings did not move the needle a whole lot. In fact, the stock sold off. When we look at this company, it's real nice growth, 11% for the full year that ended September 30th. So we are basically looking at the trailing 12 months. on September 30th. That's good growth. It's a pretty big outfit, $40 billion. And I started putting attention to this stock thinking, man, this thing's discounted. And this darn stock market, it's agreeing with that sentiment because I really started looking at this last week. And it's been trading higher every single day, which is, in a perfect world, I get a better price, but maybe I'm going to have to change that on Visa. So revenue has been growing nicely. And when we look at their margins, remember, finding businesses that give us a good example of what great looks like. Okay. Here's an example of what great could look like. They generate a lot of cash. Okay, that's good. But look at this gross margin. Their gross margin is 97.77%. When we look at Costco, it's, I think, 20% because they give really good prices to its consumers. So the gross margin is just huge, 97.7. Profit margin, 49.6. That's A plus. That's leading the pack. And of the revenue that gets produced, 54% ends up in free cash flow. This is what great looks like. And that's why this stock's worth over $600 billion, is investors understand this is a high value stock. This is worth a lot. So this is what great looks like. We want to look for this, maybe in smaller stocks, misunderstood stocks, beat up stocks. So we can buy those at a good time. Then when the market realizes, holy smokes, that's a valuable business, we make lots of money. Analysts think there's a discount of 21%. And they're buying up this stock day after day, making it hard for this individual investor to cut in here. Looks like the revenue is going to grow nicely in 2026, which is interesting because when we think about Visa, we're also thinking about the economy. Is the consumer going to be buying products and so forth? Based on this forecast, the answer is yes. The economy should be fine in 2026. So 13% growth, 10% growth, almost 10%. Bringing down that PE ratio to roughly 20. The stock's been rising. It's probably going to be in the mid 20s, maybe high 20s. And that's where it belongs. This is a really, really good company. It's growing. It's looking good. It's got a good balance sheet. And when I value Visa, I agree with the analyst. My valuation, I think it's 22% discounted. The analysts were at 20, 21%. It's a good company, solid, low risk. They don't pay much of a dividend, but this is kind of like a Costco investment, super solid, great business, great brand. All the boxes are checked. And for some reason, they did have a little bit of maybe they got a B on an exam, so to speak, because they weren't growing as fast as they were before. So the market didn't like that, and they sold off the stock. So it's created an opportunity. Now, that's not the biggest discount I'm going to see in a stock. But this isn't just any stock. This is Visa. This is a really, really good brand. I have a lot of conviction behind the company. I think they're going to, for the next 5 years, I just think set it and forget it. Visa's going to grow 10% every year. You saw their profitability. You saw their rate of overall net profit margin and free cash flow. This thing's just going to keep loading cash on the balance sheet, rebuying shares, all that good stuff. And we'll see if stable coins ever disrupt Visa. That might take 10 years to do, but that may happen someday. So we'll see. What are you seeing in the charts, Daryl, on Visa?
I'm going to start off with a big picture view. So this is a 14-year trend channel using weekly data. And basically, I've just connected the lower trend line to connect as many points as I could connect. The more the better. Made a copy of that and drug it up to the top and connect it to as many of the tops, and that ends up creating a trend channel. It traded to the upper end of that trend channel back in July of 2021, and then traded sideways, almost came down to the bottom of the trend channel in November of 2023, came up to just below the midpoint, and is trading again in 2024, about August, at the bottom of the trend channel. It rose up to nearly the midpoint of the trend channel and is not really trading down necessarily, but the trend line is catching up with that because it's been trading pretty sideways since the end of last year. So we're down to the lower end of the trend channel at this point. And except for the fact that it really hasn't traded to the upper end of the channels, basically for 4 years, a little over 4 years. That's my only concern about this trend channel. But it, traded in the upper end of the trend channel for many, many years. So now we're down at the lower part of it. I guess only time will tell whether, it starts moving back up and gets out of this sideways trading. So let's go to just a 1 year using daily data. And this is a 2-year view. So one of the things that I notice is it comes down and touches the 200-day several times. In August of last year, it actually traded below the 200, but notice that over this time period, that 200-day is upward sloping. It is now rolled over and downward sloping. So that has me a little bit cautious. The 50-day is under that and downward sloping. The 21-day also looks, let me make that thicker so I can see it a little better. Yeah, so the 21-day is downward sloping and the 5-day is downward sloping. So at least the short-term trend looks to be downward. Accumulation still looks great. The money flow is currently negative. RSI is in negative territory. Hasn't really been able to get above 60 since June. It has dropped below 40 1, 2, 3, 4 times over that same time period. I think this one's going a little bit lower, but just keep in mind that longer term trend, it seems to hold that, with many years worth of data, it seems to hold that trend line. We're still just above it slightly. So I wouldn't be surprised to see it come down here and possibly touch that. I don't know what that level is. Looks to be about 323. So over here, 323. Well, it's not very much. It's almost touching that line. So I think it's still under a little bit of pressure. I'd keep an eye on it, especially with the 200-day and the 50-day still downward sloping. I think you have some time to get into this one.
Thank you, sir. That's excellent. So that's exactly the analysis I wanted on the charts. Thank you. Okay, so let's move on to Target. Let's take a look at Target is a retailer, and I think they're a consumer discretionary stock. And I looked at retail stocks, in forming a video for the community, and Target really stood out as a discounted stock. And a couple of things that I liked about the stock. First is the discount, because it's based on cash flows and profits. But when we look at Target and start looking at what is expected to happen from this stock, this is a smaller cap versus Walmart, which is huge now, but they're a competitor to Walmart. The 1 year looks terrible, and the 5 year looks terrible. The max, look at this. This stock was really doing great for a while, and then they had their problems. Now, they do have a forecast that's showing growth. This has a low PE. Analysts do think there's a discount. And when you look at the rear view mirror, we see problems. The quarters, they were contracting the business. But when we look out the windshield and look at the forecast of where revenue is going, this is what I'm seeing out the windshield. Looking forward, we're going to see some growth. We are finishing this year. This is fiscal year 2026. Target follows what they consider the retail calendar. They think close a month after December, because during the holidays, people buy stuff. They buy gifts. They give gifts and so forth. And a lot of people return that stuff. So in order to as accurately report your annual revenue, you sold a lot of stuff in November, December, but a lot of stuff was returned in January. So the retail calendar wants to put that in one fiscal year and one quarter. That way we know net after returns, this was our revenue. And that's why they follow the retail calendar. And we're in this year, fiscal year 2026. And this year was not a good one. They contracted a bit. Profitability is down. But when I look out that windshield and look at next year, which is going to be fiscal year 2027, that starts on February 1st, 2026, they're supposed to start growing again. And they're going to start growing their profits. And later years are going to be growth years. Now, this is a retailer, right? Can they grow at fast rates? They can, if they have the right assortment. I know they've been more disciplined on inventory. So they could have some positive surprises, and the profits are going to expand. This is a stock that is very discounted, as I showed. The fundamentals are showing that this business is being counted out. And it's an 11% discount according to analysts. Now, when we look at Walmart's flourished. It keeps going higher, which is incredible. But a lot of it is, looking at the rearview mirror, so to speak, because the stock's really risen nicely. But this rise of 130% over the 5 year and even 21% here in the 1 year, it's created a stock that has a 39.9 forward PE. I mean, I can buy Nvidia at a lower PE. And Nvidia is growing way better than Walmart. They make a lot more money than Walmart. What would I be doing buying a stock that is a retailer at 39.9? I just showed you Target there at 11. Analysts think it's a really strong buy, but you're not getting any discount, which is, to me, an oxymoron. What do you mean it's a strong buy? You're recommending people buy stocks at fair price? It's not much of a recommendation in my book. When we look at their growth, yeah, they have been growing, but it's not incredible. It's just a little bit of growth. And they are expanding their profits. So these numbers are stable, growing. I get that. But this is a really high PE for a retailer. And you look at the margins. Remember how I mentioned we saw what great looks like. Visa, high margins, high free cash flow. Gross margin, 25%. Visa was at 97. Profit margin, 3%. Visa was at 50. So these guys aren't close to what great looks like. Now, this is Walmart, really well-known name. Free cash flow margin, 2%. That looks terrible. Now, back in its heyday, I think one of the reasons Target was more desirable than even Walmart was gross margins are a little better. And you see they've come down a little bit. Profit margin better, and free cash flow margin a little better. So if they can get the free cash flow margin up to 4 or 5%, I think this stock's going to work. So what do you think of Target?
Okay. I'm looking at 5 years worth of data because I needed to find some downtrend lines because they have been under some pressure. So this top downtrend is starting in 21 April, about the same time that the 200 days started rolling over. I think the 200 days started rolling over maybe 2.5 weeks earlier. And they did get one final push higher, and they haven't seen that level since. So we have this downtrend line connected to this point, connected to this point, and this point. So that serves as one reference line. And then they started on another downturn, a pretty severe one, back in November of last year. So I have a point connected there to here, to here, to there, and to there. So it's got 4 or 5 points connected to it. So now you know where those lines are, why they're there. Then we'll step into just 1 year. It looks like they came up and tested that lower downtrend line on, okay, the market's open. So they did go up and test it today, and they're actually pulling back. So they opened today at 92, and they're currently trading at 91. So they are bouncing off that trend line back to the downside. The 200-day has been down sloping, and notice this trend line pretty much parallels the 200-day all the way down. The 50-day was declining, rose a little bit. It is also back on a decline, but it is upward sloping at the moment. Looks like it bottomed out on the 25th of November. The 21-day is upward sloping. The 5-day is upward sloping, but it looks like it's getting ready to roll over.
So right there, what do we want to see in the very end of this chart? What do we want to see that would tell us that Target may go higher or would go lower? What are we looking for?
I would want to see a break above this trend, a sustained break. So at least a week's worth of data above this trend line, because this is showing me that it's in a downtrend. If it cannot get above this trend line, you see where the trend line is going. It's going down.
Yep.
So it has got to break out and maintain a price above that trend line, which is very close to the 200-day, I might add. So you have resistance here, and then you're going to have resistance here. So that would be my thoughts. I would hold off on buying it until I saw a sustained push above that downtrend line.
Excellent. Thank you very much. So a related question that came up from Bo, is Walmart more sustainable than Nvidia? And my response would be no. And the reasons for my response being no is that Walmart has seen its stock really appreciate over the last 5 years, 130%, just rounding up a little bit. And its fundamentals are, they're just not very good. 39.9% PE. Now, Walmart is a name that a lot of investors, retail investors, institutional investors, we all know what Walmart does. And Sometimes investors might think, hey, look, Walmart's catching up on Amazon. And I don't believe that at all. Like Amazon, you've heard the term, can run circles around Walmart, right? It's even worse than that. Like Amazon is in a different galaxy and Walmart is in a different universe. These guys are a retailer. They're trying to do e-commerce. Will they do some e-commerce? Absolutely. But Walmart's just never going to be anything like Amazon. So I think those stories bring a lot of investors in and say, hey, I could buy Walmart and they're going to be kind of a mini Amazon. And I'm like, no, I don't agree with that. Other investors might believe that and they have a right to. And for all I know, they're going to make a lot of money. But I'm going to stand on my theory, which is Walmart's a retailer and they're priced nearly at $1 trillion with a high PE ratio. And I showed you that even analysts think it's priced fairly at, best case. They're not growing. Their profits are not very good. On the other hand, we got Nvidia. Nvidia has a lower PE. How is that possible? Analysts think it's highly discounted. I also agree that Nvidia is discounted at this time, probably single digit. I don't think it's 34. And obviously they've done great. And what Nvidia is becoming is potentially the second coming of an Apple-like stock where they're going to use the cash they create to make their stock scarce by doing these buybacks strategically and potentially acquiring other businesses. One thing Broadcom has done well is they've acquired other businesses and become more, the revenues are more consistent. Like they acquired VMware, which is a software company that operates in the data center. That was a very good acquisition on Broadcom's part. Maybe Nvidia can start doing that. And they did announce an acquisition last week in a software play. And was it Synopsys they got? We're going to invest like 10 billion in it or something.
Yeah.
So that's the kind of stuff Nvidia. So I would actually think, Bo, that if I had to buy a stock between Nvidia and Walmart, I would pick Nvidia. I think Nvidia has a prosperous future. I don't think it's going to be as prosperous as the last 3 years. The last 3 years is like some of the best appreciation in any stock ever from a dollar standpoint, might be the best appreciation ever. A stock going, Nvidia 4 years ago is a sub $200 billion market cap company. Today, they're 4.5 trillion. Oh my God. They added $4.3 trillion of capital has been put on the table to buy this awesome business. So that's my response to you. And then you have a follow-up. And the follow-up is, will Baba be bigger than Amazon? See, that is a good question. Man, that's a good question. In 10 years, maybe. Between now and 10 years, no. I think Amazon will continue to be much larger. Let's take a look at the two here. So Alibaba is locked in with the Asian economy, especially China. So I think if I look at this, I can look at the income statement. So whenever you use stock analysis, by the way, and you look at a foreign stock like Alibaba, it's going to give you the financials in the currency that they operate in. This is the Chinese yuan. That's cool. But then the guys at stock analysis will convert that for me and give it to me in dollars. Good job, stock analysis. So I could see that their revenue is 142 billion. Now, Amazon is massive. They're knocking on the door of 700 billion, I believe. So when we look at Amazon, trailing 12 months, 691 billion. So It's not going to happen for 10 years. And they're growing at 11.5, where Alibaba is not growing that fast. Alibaba is growing slower. So I guess I would have to answer no. No, it's just not in the cards because just the distance is too broad. And again, Amazon's growing faster. So I own both Alibaba and Amazon, by the way. I like them both. I think they serve, obviously, Amazon serves the US as well as other countries. They have cloud infrastructure as a primary business of theirs. Killer, awesome business. Alibaba, great business to own. And happy to be an owner in both, substantial investor in both. So good questions, Bo. Good to see you. All right. So we are up to a request here. Before I jump into the request to look at UL, and I included, wow, man, what is going on, UL? What is going on? Nobody buying shampoo. Nobody's buying Ben and Jerry's ice cream. What is going on with the world? You got to buy Ben and Jerry's ice cream, but I haven't been a big ice cream guy this year. I don't know. Is ice cream losing its place in diets? What's your opinion on that, Daryl? Is ice cream on the up or the down?
We don't buy it very often. We tend to make our own. So
you make your own ice cream?
Yeah, my wife does.
Daryl, he knows charts. He makes ice cream. There's nothing this guy cannot do. Oh, interesting. When I was in the fourth grade, one of the, a lot of my teachers, right, they were just really great examples of great human beings. And my fourth grade teacher, this dude, he was a man's man. He fought in World War II. When I was in the fourth grade, he was already kind of like, I don't know, 65, 70. And so he showed us like a scar he had from some shrapnel from a shell that landed near him. And he was just a really mild-mannered, good guy, taught great. And his wife would come, I think, on the last Friday of the month. And she would make ice cream. And she would make it with us, or we would make it with her and watch her. And she'd serve us the ice cream. And I thought it was the coolest thing. The guy also played piano on Friday afternoons as we were like finishing the last portion of the class. That guy was awesome. Mr. Skiles, ice cream maker, great teacher, great human being, and good guy, a veteran. All right, back to Unilever. Let's get off the ice cream run, or I'm going to get hungry. Unilever. This is a conglomerate of consumer goods. They're all over the world. These guys are headquartered in Europe, right? Let's see. United Kingdom. Yeah. So they're headquartered in London. They operate around the world. They're here in the United States. We see their brands in the store all the time. There's some news. So they're going to spin off Unilever spinoff of Magnum ice cream. Okay. So ice cream. There's a big controversy around the ice cream division, the spinoff. Investors don't like it. So let's take a look at their fundamentals. I did include Unilever in a consumer staples, best and worst video, and I put it out. I think right now it's just available to members, but it's going to be available to everybody in a couple weeks. And I put like 10, 12 different companies. Unilever was in there. All right, let's take a look. $147.8 billion in market cap, forward PE 15. That looks pretty rational. Look at that dividend. Hey. Looks like a nice dividend, 3.6. They're semi-annual because they're coming out of UK. They report twice a year. Last time they reported was June 30th. Okay. And they reported that the revenue is decreasing. Not good. Okay. And when we look at the profitability and so forth, they're producing cash flow, but look at that cash flow. It's come down in the first half compared to the first half last year, lower and lower than 2 years ago. So what happened to cash flow, guys? And profit margin looks pretty decent, 11.66. This is a consumer staple company, so they're not going to have giant margins like Nvidia. So that looks interesting. The free cash flow margin did come down quite a bit. Okay. We don't have any analysts expressing an opinion on price targets. We do have a lot of analysts putting in their research to see where the stock's headed from a growth perspective. Revenue growth in 2026, it's supposed to grow a little bit and then get into a 4% growth. And then the outer year looks good at 6.7. Its profitability is going to expand and its PE ratio is going to continue to come down. So this looks decent. Let's take a look at the valuation. My valuation is that they're discounted by 11%. Not a bad valuation. Now, I use a little bit of a higher discount rate because they've had their troubles. Their cash flows come down. But we are in a market of stocks, and Unilever has comparable companies like Procter & Gamble, Colgate-Palmolive. And I think those are better stocks. Here are like a string of consumer staple stocks. The tobacco stocks look good from a fundamentals perspective. Colgate-Palmolive discounted by 21%. They also pay a nice dividend. So from a consumer staple perspective, Colgate-Palmolive gives me a better value. And then Procter & Gamble. I think Procter & Gamble is a really well-run company. And Procter & Gamble and Unilever, that's like Coke versus Pepsi. They're very similar. Conglomerate, all that stuff. And I think I can get a better company if I invest in Procter & Gamble. Now, would I push back on the theory that, hey, Unilever is a good investment at this time? No. I think if you really understand the business, maybe if you're in Europe, you see that, hey, these guys are getting it done. Their products are better than the competition and so forth. It's a discounted stock. So you have good choices in consumer staples, and they are selling off today. I noticed in the heat map that it's kind of a weird heat map. We have semiconductor going up again. Microsoft's up. We've got some green over here. And staples are down. Walmart's down. Costco's down. Procter & Gamble's down big. But Coke and Pepsi are up. But this is the space that Unilever operates in. It's down overall. So I think the whole space is down and the market's selling off Unilever at a higher pace. So that's where I'm at with Unilever. Let me flip it over to Daryl to see what he thinks from a chart perspective.
Yeah, one of the things I see here is this candle is not finding a bottom, which means it is continuing to sell off. So I'll switch over to an intraday. That's an hourly. Let's go to 5 minutes. Yeah, you can see that it's just continually selling off. I also saw that it had reached a tariff announcement low. So it's trading right where the tariff announcements got to their worst day, which is April the 7th. They did have lower prices uh, back in January and February. So those might be support levels. The 200-day is still rising. That's going to change if they stay at this level for a few days. You're going to start seeing that 200-day roll over. That will not be necessarily a pretty picture, although I can say that it peaked out on the 11th of June and seemed to bottom out on the 15th of August and started rising. So it didn't stay downtrended very long. So that'll be something to keep an eye on. The 5-day is obviously declining now with this pullback today, and the 21-day is also declining. The RSI is moving into oversold territory. PPO is negative, money flow is negative, and has been for the last 3 days. So they were showing some weakness going into whatever happened today. Was it earnings today?
No, it's just
No.
some news, and it looks like Benton's saying that there's some news around the war politics that is affecting them. And then one of their competitors IPO'd Magnum Ice Cream. So I
Okay.
think that's
Hmm.
along with, again, I showed that consumer staples are selling off, but this one's selling off harsher than like a Procter and Gamble.
Yeah. Okay. So this one would be a wait. This one needs to just settle down now after this sell off. They've been trading pretty flat since April with quite a bit of volatility for a staples company. They have quite a bit of volatility, and now they've broken down out of that consolidation range. So this would be a wait on this one. Something's got to settle down before I would do anything with this.
Yeah. There's not a lot of upside, not a lot of big reward, and it seems like the situation is not stable. Looks like Shadow Guy is suggesting we dive a little deeper into the ice cream thread and talk about liquid nitrogen ice cream, which is made by flash freezing standard liquid ice cream base using food grade liquid nitrogen. Process takes 90 seconds. If you're interested in doing it yourself, here you go. Now, your process, Daryl, your process does not include liquid nitrogen, right? What's
No,
your
we
process?
we bought one of those Ninja uh, machines. I can't remember what they call it, but basically
Hmm.
you make your ice cream base and you put it in uh, plastic bowls, put it in the freezer, let it freeze, and then you put it in the machine and it mixes the ice cream, and then it's got a setting on it where you can put in like M&Ms or
There we go.
mixers. So it has settings for that, but it's some very creamy ice cream and not a whole lot of effort.
Yep. Yeah, right now, I mean, we're heading into winter, so I don't know that ice cream sales are going to flourish. I think as we head into summer, that's when the action starts around ice cream. I would say that a good vanilla ice cream is always I'm always game on that. I don't like all the mixes of, stuff. I think other people do, but I like vanilla or strawberry or maybe a good chocolate ice cream is always a hit. All right, let's get back into stock investing. All right, so yeah, so UL is struggling, and it may create an opportunity. It's good to pay attention when stocks are discounted, and that's certainly the case around UL. So looking at the stock market, so the semiconductor space is flourishing. We know that Broadcom is going to announce on Thursday. So that's happening there. Microsoft had been having kind of a rough couple weeks. A lot of investors were selling off because the news that their AI product, the Copilot, wasn't doing all that great. And it really put stress on the stock. But it looks like the semiconductor equipment and materials companies like Applied Materials, they're doing really well today. Cisco's up. Cisco has been really doing well. Okay. And Netflix under pressure again. What's your high level opinion on this whole Netflix acquiring Warner Brothers? What's your, are you an investor in Netflix? Is this either make you more interested or less interested in investing in Netflix since we have this big acquisition going on? What are your comments on Netflix?
I don't own Netflix, and I would be less interested today owning Netflix. And basically, there's going to be some battles over this acquisition, and I think your returns over the next year and a half while all this settles out is probably going to be somewhat stagnant. So I think unless you're a huge believer in them, your money's just going to be sitting. That's my personal opinion. I do own Warner's. I got that from a spinoff a long time ago, and I'm just now breaking back even on that one. Paramount launched a hostile bid today, so they're going to fight Netflix. We mentioned that on Friday that we expected Paramount to challenge this, and they are challenging it as of right now. So the price of Warner is actually up a little bit. Yeah, it's up a little bit. And Paramount did offer them 30, and for some reason they still took the Netflix bid. So Warner Brothers is 27.88 right now. So I'm profitable in one of my accounts and still not profitable in another one, but it's very close to break even. I'm probably going to close out my Warner Brothers position in my one account because I've been holding that ever since they spun off and it's been underwater. And I don't think it'll go much above 30. But Paramount's battling it out right now. Netflix is going to have challenges getting any kind of approvals. I'm already hearing politicians stepping in that they don't like the idea, and on both sides of the aisle, it's rhetoric's coming forward. So I expect them to have a battle. I think Netflix is going to be pretty much flat for some time while they figure this out.
I think Netflix is dead money, like you said, for at least 2 years, maybe 3.
Yep.
And because this is just going to be a mess. No ways around it. If they had the fast track to acquire Warner Brothers, it would take a minimum of a year to get the transaction done. Then you got to integrate the businesses and do all kinds of stuff. And you might see some benefit in 2 years. Fast track. But from what we're seeing, this is going to be the slow track.
Yeah.
It might take 3 years.
Yep.
No thanks.
It's going to be challenging.
And, I owned Netflix. I made good money on Netflix. But I think that YouTube, it's got all the advantages. You know how many if Google doesn't have to create one video. They don't have to create one movie.
That's because
they don't have to operate one network. They have the world do all that, and YouTube has become so big, the biggest streaming platform on earth, that if you go on YouTube and you want to watch a TV show, you can watch clips of a TV show. Like I like watching a little bit F1, but I'm not a big fan. Like I can't watch the whole race because they're just doing laps. But on YouTube, once the race is over, boom, 10 minutes, I know what happened. Football games. Yeah, I can sit through a 2.5, 3 hour football game. I can watch the highlights. YouTube is basically an ESPN killer. ESPN is done. Like they used to own the highlights kind of market, but then YouTube came out and it's like game over. Viewers can just go to YouTube 24/7 and pick out what they want to see. So I just think the future is going to be a struggle for Netflix. I think Netflix and Disney and who else is in that category? I guess Comcast. Those guys are going to be kind of a conglomerate media company, media empire. All right, cool. Good luck with that. YouTube's always going to be the okay. And once you guys create all that content and your movie, your television shows, put out the shows, your viewer is going to demand that you put it on YouTube or it won't be relevant because now we're in the era of TikTok and, shorts and Meta has threads. The world is really, really changed with regards to media. So that's why I'd rather own Google versus Netflix. I consolidated and put my money here, and I'm glad I did so. So that is Netflix. All right. So what else is going on the heat map? So staples are under pressure. Google's under pressure. Meta's under pressure. So Berkshire. So I think Warren Buffett's kind of pretty much taking his last lap, right?
Yep.
All right. And
he'll still be chairman, but
yeah.
Geico CEO is leaving to go to JPM. So that may be why the stock is down today.
Yeah. Yep. Can understand it. And what's interesting, I've heard that Berkshire doesn't ever issue out stock because they don't want to liquidate the stock, and that they pay their executives, good pay, bonuses and so forth, but they don't issue out like other businesses issue out shares to their officers, and there's a vesting period, but Berkshire doesn't do that. All right, so that's going on there. Aerospace is picking up. All right. All right, cool. So what's going on with your channel?
I put out a video yesterday just reviewing 11 charts that I thought were interesting from my portfolio. And basically it's kind of it's for my own purposes so I can make decisions based on what I'm seeing in the charts, but also share with other people how I use charts and make decisions. And hopefully other people can either learn or tell me where I'm making some mistakes. So I put that video out yesterday. I'll probably do that one probably on a weekly basis if people like that. The first one got a lot of response. So
Great.
I thought I would try it again another week, and maybe we can watch changes week over week as long as the stock stays interesting.
Good idea. All right. As a whole, the market is heading down on the S&P and the Dow. Nasdaq's up a little bit. The Russell
Yields are moving back up for some reason.
Why are yields moving
the
up?
10-year is up 1%. I don't know what's going on. I don't know what the bond market's doing, but
why would yields be going up? So
Even the 3-month yield is up 0.5% right now, 2 basis points.
Yeah, I can't put my finger on it. So Bo's asking if maybe you can put your channel link in the chat, please.
You bet.
Then viewers could find your content. All right, so stocks are not, looks like stocks really need a cup of coffee this morning. They're just not waking up. They're a little groggy. Maybe they, along with the U.S., was watching a little too much NFL football, and they're feeling a little sluggish, speaking for myself. And looks like the S&P is just kind of getting going. What did Europe do? Looks like Germany is up a little bit. UK down a little bit. I think this is France down a little bit. Asia closed higher. And so a lot of good economic news came out, or I should say positive economic news came out of China, that their exports were really high. So this is the Shanghai exchange. Now Hong Kong was down, which is a surprise. And then the Nikkei was up a little bit. So it looks like it's going to be not a big moving week, although, I mean, if you're in semiconductor, you're doing well today. If you're in tech, you're good. And if you're in financials, depends. Financials doing okay. Robinhood's up again. Go Robinhood. Oh, here we go. Let's keep the ice cream conversation going. That's a pretty good qualifier right there.
Yeah, I've got a long list of those, and she fills them all, so she can cook.
Excellent.
She can make ice cream. She's a good catch.
Yeah. Yeah. And speaking of which, my wife made a terrific dinner last night. And I enjoyed it very much. Daryl, anything regarding Meta trades this week? Meta. What's going on with Meta? It's been going up. It's been picking itself up, doing itself a favor by telling the market, you know what? I get it. You guys didn't like that we're spending so much darn capital. I heard it. Got it. We're not going to spend so much capital. Now that happened here, and then the stock kept going. But if you look at the 30-day, this stock went from 589 to 673. In my book, this is like easy money. I was buying Meta. I own a lot of Meta. I don't care. I've seen this movie before. And the movie, usually you have sell-off, rally, sell-off, rally, sell-off, rally, sell-off, rally, sell-off, and we're probably going to rally higher. In my opinion, this stock's going to $1,000. And when we look at their forecast, right, let's take a look at, so what does great look like when we're looking for a great business, right? So business that's growing and that's massive, $200 billion business. And when we look at their profitability, big profits, big net profit, operates with very good cash flow generation. And looking at their forecast, and this business, right, they have some businesses that continue to grow organically, especially something that's happened more recently is the monetization of their WhatsApp business. They weren't monetizing it previously, but now they're monetizing and they're feeding those users Meta AI, or presenting them Meta AI. So these guys are going to keep growing, become a $300 billion revenue business. They're going to expand their profits. Their PE is going to drop. or the stock price is going to rise. I think the latter. I think over the next 3 years, the stock's going to 1,000. So its PE will be at mid 20s, maybe 30. So Meta's, man, this one's, I have high conviction. I think there's only one Meta. They don't really have a competitor. They have a good moat around their business, their network power, and I think it's discounted by 25%. They did the right thing by communicating to the market that, hey, we got the message. We're not going to overspend in the data center. We're going to scale back our investment there, and the market loved it. What do you think about Meta, Daryl?
So this is one that I covered in my video yesterday, but I'll give you some highlights. We are facing resistance right where we're trading, where we hit on Friday. We already had this line drawn there, and that was at the gap resistance. It came right up and hit that 2-3 trading days ago, and it stopped right at that resistance point. It did break above the 200 shortly during that day, then closed below it. The next day it closed slightly above it, and closed below the 50-day. So it hasn't broken above the 50-day yet. And today we're trading down. I think this downtrend is probably going to be short-lived. I'm just waiting for a breakout above this resistance point. But I may pick up some shares today, even on a percentage decrease, because I do want to get this a bigger holding in my portfolio. And someday I ought to talk about, make a video on my strategy, because my strategy for the last 5 years is going to be different than the next 5 years. And that's been planned for quite a while. So I probably ought to explain how my portfolio is constructed and has been constructed for the last 5 years. It's actually done exactly what I wanted it to do. But I'm getting another source of income this coming year and won't be as dependent on my portfolio for income. So I'm going to be moving a little bit more towards growth. And this one's definitely one that fits in to that strategy. So
All right.
just last week, I did trade options twice and made about $1,400 over just a couple of days on each of those trades. The options have actually gotten pretty expensive now compared to the anticipated upside. I got to pay about $40 to buy a call, and my upside at the moment is 761. So it would have to break up pretty high to start becoming profitable just because of the options price. So I'm probably going to switch to just buying shares at opportune moments for a period of time.
Very good.
Also notice the RSI. In fact, I'll adjust this, guys, for you right now as we're speaking. So I'm going to grab this line because it's now it's the last 3 times it's failed to get above 60. So we will need to keep an eye on that. If it starts dropping down a little bit lower, then I would wait for it to kind of bottom out and reverse. We'd see that in the price as well. But so it came up and hit 60 for the 3rd time in a row. So this could be a peak for a few days.
Excellent. All right. Perfect. So I was executing some trades. My biggest buy that I just executed, I bought 10 shares of Adobe, and I'm going to keep accumulating Adobe. Salesforce, Fortinet, Intuit. I think the software space is going to be a good space. Bought into that weakness in consumer staple stocks and bought some Procter & Gamble, some Colgate Palmolive. And those are some of the trades that I completed. But I'm going to go into Intuit, Adobe, Salesforce, Big, AppLovin. God, that stock's so hard to keep up with. But I'm glad I own it. And then Fortinet, I bought some more Fortinet. I would love to buy more AppLovin, but so does everybody. Everybody's on the same page. Everybody wants to buy AppLovin. Every time AppLovin pulls back, I buy. And it has had some pullbacks recently. All right, so let's check in on what the market. I think the market's pretty close to where we're at before. Ooh, Google coming down. Netflix, man, not good.
How much are they down?
Netflix is down 4.41%. And Netflix, like for the last, I would say a couple weeks, the stock's been under pressure. I did call this one out, probably starting 9 months, 12 months ago, that the stock was just too expensive. I'm not a hater. I bought the stock. It made me a lot of money. I like the stock. Make money from my portfolio. I like you. But I started calling out that this thing's just too expensive, and it kept going higher. Market didn't care what I thought. Said, no, we want to buy Netflix. It kept going higher. But now it's been, it's really down. From the top, 28.4%. And I think it's going to be a rough ride acquiring this Warner Brothers company. And overall, I think I shared my comments earlier about, this company is at a disadvantage against Google, absolutely. And I think it's priced 4% too high as it sits. On top of that, you'd have to offer me like a 35% discount on Netflix because I think they're at a disadvantage against YouTube. That's where I'm at. And did you want to show the charts on Netflix?
Yeah, so the 200-day looks like it's getting ready to start rolling over. Now the 50-day is declining. Boy, if I owned this, I would be seriously consider scaling down my portfolio. I think downtown Josh Brown, I think he reduced his stake in at about 85%, I think is what I heard over the weekend. So I would think I would be doing the same, or I'd be selling covered calls if I had it. So yeah, because this 200 days getting ready to roll over. We're getting into sold territory. Let me see when the last time was that they did that. Let's see, they're 29. So they haven't really been what I would consider. They did, I guess they got a little bit oversold in 2023 right here in October. It looks like they got a little oversold. So they don't spend much time there. So this will be something to really keep an eye on if they come down. The last time that they really had a big pullback was in 2022. I'm not expecting anything like that, but they're already trading below their 200-day, and the 200 days getting ready to turn south. I'd be careful with this one.
Yeah, I think, some of the stories I was hearing about Netflix, which,
by the way, I love Netflix. I mean, I watch it every single day, so I'm a huge fan.
So who's showing Landman right now? Is it Netflix? Or is that, I think I'm seeing that on Amazon Prime. Okay. What do I like on Netflix right now? I can't think of what I like on Netflix at the moment, but I do like Landman, and that's being shown on Amazon Prime. And I do like the second season of what's that show? It takes place on a Navajo nation, and I already forgot the name of the show. I haven't been watching a lot of movies lately. The NFL's got my attention. All right, so we have. All right, let me finish off on the Q&A within Netflix, and then we're gonna switch over to Micron. Was in Netflix trade, closed first thing at opening bell, broke even. Yeah. I haven't been shy about my comments around Netflix for the last year. And sometimes, I feel like I'm out in left field, and I have been out in left field. Okay. Palantir. I was way out in left field, got it wrong. I was wrong. Early on Nvidia, I was wrong. And sometimes, my spidey senses are right. Google recently, Netflix, we're now exposing Netflix. It's like, okay, you're a media company. This whole behavior, by the way, it reminds me of the media industry of 50 years ago, like mergers, acquisitions, and it's like, oh, great, this is AOL Time Warner all over again, which never worked, and AT&T acquiring Warner Brothers didn't work. So we'll see what happens. Maybe Netflix is they would catch some luck if they're not allowed to acquire, and maybe they do hand it off to Paramount, but we'll see. All right, so let's get into Micron. DJ wants to talk a little Micron. It is up 3% today. This stock is just kicking indoors, making it happen. Up 236%. Now, Micron designs, develops, manufactures, and sells memory and storage products. And they have two other big competitors. One of them is Samsung, and the other one I forget is, I think, a Chinese producer, but it's a competitive market. It's not like, hey, you control a proprietary high performance, chip. No, this is memory. And it is in demand because the data center is being built out. They become a $273 billion market cap business, forward P of 14. When we look at their business, it has been growing quite nicely. The fiscal year that ended August 28th, they had a very good growth rate. They're going to announce earnings next week, by the way. They're going to announce on the 17th. So that would be a week from Wednesday. So that'll be a big earnings next week. So we know they grew last year. Now let's take a look at their forecast. And before we do that, one important thing about Micron, okay? Here's Nvidia. Here's what great looks like. You got growth, beautiful. Make lots of money, excellent. 70% gross margins, 53% profit margins, 41% free cash. So we know what great looks like. Let's see how Micron stacks up against the great example. Gross margins, 40%. Okay, that's lower. And in previous years, when you have more normal years, look at that gross margin, not good. When you have less demand in storage, it gets really ugly. Okay. And then profit margin this year, very good. But previous years, not so good. Okay. So these guys are good, especially this year. Free cash flow margin, terrible. So these guys are not close to great. They're good. And I think the good is temporary. Because when we look at their forecast, the data center, I think Meta saying, hey, we're going to spend less in the data center. I think other businesses are going to start doing that because their profitability and so forth is waning. And you look at Micron, the outer year, it's showing that they're not going to grow. And when we look at the year they're operating in, They just finished this year, fiscal year 2025. They're operating in this year. So the growth is going to be very good this year. The data centers are still ordering a lot of storage and so forth from them. And they are going to expand their profits, but it's kind of baked into the product or the stock price, excuse me. Next year, they're going to grow, just not as fast. And then it's going to begin to slow down. So I think the stock can maybe continue to work, but you got to be aware. This is not going to be a 5-year hold ever in my mind. It would be more like a hold for a year, 9 months, 6 months. And I don't have a very good valuation for them. I think they're priced 55% too high because their cash flow is terrible. And I use cash flow as one of my principal valuation methods. When I look at TSM, they're fairly priced because their cash flow is better. When I look at Nvidia, Nvidia is discounted because of their cash flow. So I'd rather find businesses that are doing great, that have beautiful fundamentals, that are close to that gold standard of looking great from a fundamental perspective. And Micron doesn't fit that mold. So I am a seller of Micron for those reasons. And those are my comments. What do you think about Micron?
Well, I'm going to go to fast graphs first because you have to realize this is a very cyclical business. So whenever you see earnings pulling back, 3 out of 5 years, 4 out of 6 years, you just every 2 or 3 years you see a big pullback. That's a very cyclical business. So just to reiterate what you said, this is one that you don't buy and hold it. That's for sure. Even over the last just 24 and 25, they were down 50% and then back up 30%. Here we went up 100% and then we broke out and we're, up 94%. So this one would be a trading candidate for me. It could be a lot of fun swing trading this one. Let's go back to 1 year and talk like we normally do. So we have a 50-day that's increasing. Looks like they've tested that 50-day a few times over the past 6 or 7 months. They came down and tested it hard on the 20th of November. The 5-day was decreasing. It's back on the increase today with today's 3.5% increase. They are trading 83% above their 200-day moving average. And they have also tested that as recently as May. Almost in August, they spent some time under the 200-day. So it's not out of the question. It's kind of risky, in my opinion, to be buying it this far elevated above its 200-day. One other thing that we see here, I'll draw an arrow. We're seeing increasing prices. And then I'm going to take this little red line right here and modify it since the last time that we looked at it, because I'm going to stretch that out. So this is called a negative divergence, bearish negative divergence. You have higher prices and less momentum on every price increase. This, you end up paying the piper at some point. I don't know when. It could be 6 months. It could be next week. Who knows? But at some point, you pay the piper on these negative divergences. The PPO is getting ready to get a bullish crossover. We are in bullish territory. But notice again, we have a declining PPO, so I could copy this line and drag it down here, and we'd have two indicators that are telling us momentum is declining while the price is going up. Interesting that the price is going up and we have negative money flow. We're back in kind of no man's land at this particular point in time. This is one you have to watch. You have to watch it and swing trade it, in my opinion.
Excellent work. So that is Micron. And you know, the semiconductor space has been flourishing and it's enjoying. I don't know that they'll ever experience that again, but you know, we'll see. I think the data center investment is going to begin to slow down. Meta was maybe one of the canaries in the gold mine saying, okay, we got it. We got to slow down our spend. Maybe other businesses are going to have to do that. Even OpenAI, I saw just a headline. I didn't read the story that they are looking to lower their CapEx because it's just not going to be sustainable. We'll see. All right. So what's going on? Anything worth noting here? Google's down. Wow. Pretty good sell-off. Tesla's down quite a bit. Walmart down. And look at this. Target, the company I'm looking to buy. I didn't act fast enough this morning. I saw it was under pressure. Look at that. It's up 1% while Walmart is down. All right. Go Target. This is where I started to say, I'm going to start buying into Target. So far, so good. So far, so good. I'll keep buying it. I think it's going to work. And look at that dividend. I forgot to mention, Target pays almost a 5% dividend. Great. I love it when I buy a stock and it rewards me two ways. You get paid income and then it goes up. Those are great stocks. Maybe Target might become the next one. The other thing that it's an unofficial fundamental data point, but my wife shops at Target and she has told me just in conversation that the store seems like they're really low on inventory, that they're sold out. I'm like, oh, okay, that's good. That means they sold out. They're not carrying excess inventory and people are buying stuff at Target. So unofficially, I've heard from a consumer that the store is looking like it's been selling their stuff. All right. So looks like we got another question from Paul. Awesome. Final question to Daryl. Do you think Nvidia is trading in consolidation? I'm getting fed up of holding a trade.
Well, it is consolidating a little bit. We did hit a high on the 29th of October. The last consolidation we had started in the 30th of July and went all the way to August, so 4 months. So this is a pretty short one. This is only 6 weeks or so, maybe even less than that. It is at support. The 5 days increasing, the 20-day has bottomed out and looks like it is beginning to increase, and the 50-day is increasing. So I'm expecting, I think I have a price target that I've been communicating for at least 6 weeks that we'll hit 204 to 208 by the end of the year. I think we need to get through this week, and then the last 2 weeks of this year I expect to be pretty solid. They are holding a 40 RSI, and that is increasing, so the momentum is increasing. They're not quite in bullish territory yet. I think we need to get through this week, and then you'll see better things on Nvidia. I've added more shares over the last week and a half.
Thank you, sir. I'm now a proud owner of Regeneron stock. I just started a position in Regeneron, and we'll see if I can build that up. I like where that's going, and I think the stocks that I had started a small position in Novo Nordisk. I think I'm going to sell that off, but I do have an open question. Let's look at Pfizer. I've seen some glimmers of success on Pfizer, so to speak. But then today it's not doing bad. Okay. So big dividend, 1 month. So I've seen some good days. And this one here, it's just not a growth stock, right? Not growing. It makes a lot of money, has good margins, pays a nice dividend. But look at this forecast. They don't have a pipeline that is going to grow the business. That's the problem. So I'm not overly excited about this. Regeneron, I showed you, was going to be growing. So this one here is not looking good. Not looking good at all. What do the charts look like for Pfizer, if you wouldn't mind looking at Pfizer?
Yeah, I'll have to update this one since it's been a little while. So I'm just going to take this trend line here, which we have connected to this point and to this point after the tariff announcements. I'm just going to drag it up a little further. So after trading below that trend line for at least the 13th of October, this is when they made the announcements about medication prices at the White House, and that was pretty short-lived. They came down back below the trend line like they were before they made that announcement. It looks like the last 2 days they are trading above that trend line. They do have a 50-day that's upward sloping. 200-day looks pretty flat at the moment, and the 20-day is also upward sloping. This is a longer term support line. You can see we've tested it there. So they're closing above that as well right now. And it looks like they've been trading pretty much above it since the 21st of November. They did have 1 day on the 2nd of December where they dropped below that support line. So they've been trading under that support line for quite a while, and they've broken out above it. So that's somewhat of a good sign. They've held pretty much a 40 RSI since the tariff announcements. That's usually pretty good news. They got oversold here. They almost moved into oversold or overbought, but they haven't quite reached that state, and they're just about at the same price level. So looks like momentum could carry them a little bit further here. PPO is in bullish territory, I see as well.
Okay. All right. So I'm going to hang in there, especially today. Like some other stocks are selling off. So I think I'm going to vote NVO off the island, but I'm going to keep Pfizer. I have a small position in Pfizer, nothing big. Excellent work today, sir. Thank you very much.
Thank you,
And
Victor. You too.
again, you can find Daryl's channel. I think he put, let me see if I can find your comment here. Here we go. So you can find Daryl here on YouTube, Investing Portfolio Pathway. And please support his channel, subscribe to his channel, like his videos. Let YouTube know that this guy's got a lot of good information to share with investors. And really appreciate you doing the streams with me. I learned a lot. I'm in a better place here with Regeneron. We looked at that. I'm glad we did so. I decided to buy on this stream. Holding off on Visa. I think that was good analysis on that. Target. We covered Target. That stock's headed higher earlier. What's going on? And I like to see when a stock I think is a good investment is bucking the trend, right? Target is going higher, but the big giant Walmart is going lower. All right. It's like being at the horse track, and I've got some money on this horse, and it's leading the race for the moment. It's been losing a lot of races in the past, but maybe it's now going to be a winner. Maybe it's been doing the right things lately. So go Target. Best days, asking about Unilever. That was an interesting conversation piece. These, man, incredible. I think that's overdone. It's a big sell-off. Good dividend. And these consumer staple stocks, I like buying stocks when nobody else is buying. And if nobody else is buying, prices are low, I get a good acquisition price. And I think consumer staple right now is in that condition. Everybody's excited about, semiconductor and, all kinds of, high growers, but the acquisition price on consumer staple is looking pretty darn attractive. Thanks, Best Days, for covering it. DJ, thanks for asking about Micron. Paul, thanks for the questions. Best Days, thanks for, again, for coming on. Benton, appreciate you asking and commenting on UL. And I think that's going to be close to the end here. I think we've covered all the requests. And Paul, thank you, sir. That's quite a compliment. Thank you. And really enjoy having all of you guys on the streams, being a part of the channel. And let's figure out how we're going to beat the market this year. I think that one is kind of done for me. I'm up 32% year to date on my stocks. But how are we going to beat the market next year? We got to figure out how we can outperform the S&P and keep this thing going that retail investors have gotten started, which is we are getting smarter, getting better, developing better skills, outperforming the market, outperforming these institutional investors. And it's fun and it's rewarding. We get to make money. And I'm going to keep doing it. So we're going to stream again on Wednesday. Join us if you can. Same time. We're going to start at 9 a.m. Eastern. Same format. And we might have some earnings reports to discuss at that point. We'll see what this market's doing. See if we're going to continue to see the semiconductor space catch a bid, or if we're going to see it kind of pull back. And we'll see where there's opportunity. So thanks again, Daryl. Everybody have a terrific week, and hopefully we'll see you soon.
Take care, everyone.